Welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and this is David from the DeFi University. And really quick before we kick things off, I want to make sure that we hit up our socials. So if you're not watching on YouTube, please come over to YouTube and follow us on YouTube and join the chat, because a big part of these DeFi episodes that we do is they're educational. And so we want you to be in here and asking questions so that we can ensure that the information that we're putting out is being received and understood. So if you could, please come over to the chat. We'd love to see you there. But that is just DeFi Crypto Airdrop on, and it's then also we have the DeFi University. If you want a link to it, we have linked it in both the episode and on our channel. This is up until, I think today's the last day, or maybe tomorrow is the last day it's free. So if you want to get in free, you better hurry.
That's right.
I'm gonna say it's for those people in the community that are here and paying attention and have their finger on the pulse. You got in early, so it's gonna be what, $97 a month after today.
That's correct.
All right, so hurry up. It's time's a ticking, and then it's not live yet, but DeFiUniversity.xyz is his website, and that's where what exactly are you going to have on the website?
Yeah, so the website is going to be like a DeFi newspaper. And I'm also going to host all of the custom tools that we build in DeFi
Okay.
U. Let's say, a yield calculator, an impermanent loss calculator. Those are just two really basic examples.
The
But
looping
one place,
calculator.
yeah, the looping calculator, stuff like that. So I'm thinking that it'll be, a really nice DeFi newspaper with a newsletter and all of the advanced tools that you might need to use as a DeFi operator will live there.
All right. I don't know if there's anything you can do, but it kind of sounds like you're talking in a toilet paper tube. There's a little bit of a fuzz in the background.
Okay, gotcha. Let me see if it will allow me to change the mic. How about now? Is that any better at all?
No, it sounds like there's some fuzz in the background, but I mean we'll drive forward. I just wanted to, wasn't sure if it was something that you could mess with real quick.
Yeah, so let me see because I've got an air con going right now. I just turned the thing off. Is that any better, Mike?
Yeah, that's a lot better.
Great.
So,
Awesome.
uh, in preparation for today's show, so I want to jump right into it because I know that last time we ran out of time, and I know that we're still on a time crunch here. So, those of you that don't know what we're talking about today, is Pendle and Contango, using them together to loop stables to lever up and earn more APY, using this strategy. One thing that I did, and David, I'm sure that you're aware of it, that I found out today while doing some research was there is actually this new platform that is part of Pendle called Boros, and it is trade funding rates on margin. Have you seen this?
I have. And so what Boros allows you to do is hedge funding rate exposure or speculate on the direction of funding rates. And right now, I think it's live on Binance, and I think they're about to launch it on Hyperliquid, Mike.
Okay.
But Boros is a very, very cool protocol.
Awesome. All right. Well, I don't want to waste too much time. I just wanted to bring that to everybody's attention in case they want to start looking into it. I'm sure that we'll do an episode at another time on it. But David, take it away.
Okay, you got it. So let me go ahead and share my screen here. I'm just going to share the entire screen so that you guys can see this. Just want to double check. Mike, give me a yes if you can see Pendle here on my screen. If yes, then because I can't see you. So was that
Oh, yes, yes.
yes? Awesome, great. Just wanted to make sure it's working. Okay, so what we're going to do today is we're going to start off by taking a look over here on Contango itself. And the reason why I want to begin here today on Contango is I like to use Contango as a screener that will help me screen for interesting opportunities. And since ETH has ripped higher today, if we take a look at a chart just real quick, look at that, fresh all-time highs as we speak. So ETH is breaking out to fresh all-time highs, and this is I've been waiting for this. I think that we might push a little bit higher, but plus 15%, that's a lot in a session. So really great to see some fresh all-time highs. But because ETH has pushed to fresh all-time highs, it might make sense to take a look at looping some ETH products. And we could take a look at some ETH PTs. So we can do both of these. We can take a look at these ETH products, and we can take a look at these stablecoin products, because the interest rate arbitrage play that we're going to execute using Contango is basically the same, regardless of whether you're using stables or using ETH. Now, my internet connection out here in the boondocks is not the best. So
You don't have
things,
you don't have to tell me about that, man.
I mean, things take a little while to load, and if I just kind of cut out there for a second and you don't hear a couple seconds of what I'm saying, please just let me know, Mike, so that I can go back and repeat myself. But let's start off here by walking through what interest rate arbitrage actually is and what we're going to be doing here. So I'm just going to go ahead and bring up, I just want to bring up a chart of ETH real quick, just so that I can move it out of the way, and now I can draw. Okay, so if we are going to execute interest rate arbitrage, the first thing that we need is we need to determine what collateral asset do we want to supply. So I'm going to use a really simple chart here. On the supply side, you've got whatever your collateral is, and that the S stands for supply. On the borrow side, you've got whatever your debt token is, whatever you're borrowing to loop up, ostensibly, what you supply as collateral. So let's say that you supply a yield-bearing stable as collateral. Maybe you supply something like SUSDE. And so we're going to get into PTs in a second here, those Pendle products, but I just want to walk through the idea of interest rate arbitrage so that we really understand what it is that we're executing on once we start to go and use those Pendle products. So let's say that you're supplying SUSDE. And off the top of my head, I don't know what SUSDE is paying right now. Mike, you could easily find out if you go to Athena, but let's just say that it's 7%, just for the sake of argument here. So if I'm supplying a yield-bearing stable earning 7%, then to execute a successful interest rate arbitrage play, I need to borrow
9%.
something. Awesome, even better, 9%. So that is a 9 right there. So if my collateral asset earns 9%, and then let's say I want to borrow something against this to loop this up, maybe I borrow USDE against SUSDE. And so to borrow USDE, maybe I pay 5% to borrow USDE. And so what is my spread? And so some of the language here is important. When I say spread, what I'm referring to is the difference between what I earn on my collateral and what I pay on my debt. So my spread here is 4 percentage points. So if I'm earning a 4-point spread and then I apply leverage to that, meaning I borrow USDE and I loop it, I swap it for further SUSDE, repeat the process a couple of times until I hit maybe my max LTVs, then you can start to apply multiples to this 4%. So instead of just earning that 4%, all of a sudden you could do 30% or 40% APY by looping something like this. So this is referred to as interest rate arbitrage. And this is the basic idea that I just want everyone to understand so that as we move forward and start to use these zero coupon bonds over on Pendle, these PT tokens, we've got to have this foundation first. So Mike, what do you think about this? You think this is all landing for everyone in the community so far? What are your thoughts? Should I go back and repeat any of this, or just move forward? What do you think?
I mean, they can go ahead and type in the chat if there's any questions, and I'm more than happy to answer them. I just say drive forward. I mean, it's pretty basic so far. I mean, you're lending for 9%. You're using that as the collateral to take out a loan at 5.3%. And that loan that you take out, like you said, you just swap it back into that asset so that you can re-lend that loan that you took out at 9%. So and then you again take out a loan against that for 5.3%. And just depending on how many times you loop, you're levering up each time basically. And so, you might start out with $100,000 and at 9% APR and a borrow rate at 5.3%. If you do a loan to value of 50% and you loop three times, your total collateral is about $337,000. Your total debt is about $237,000 with a net APY of 17.79 and a loan to value of about 70%, which would be a moderate risk on your health factor. And your liquidation price would be about 78 cents
So
if the
Mike,
stablecoin's depegged.
Mike, do you have the link for the calculator? Because
I
that would
do.
be really, yeah, that'd be great, man. If you could share that with me real quick so that I can, show that in action, I think that'd be really, really cool.
All
So,
right.
the whole idea here is you earn more on what you supply than you pay on what you borrow. And when we're using leverage, this is recursive looping. So, what we need to make sure of is number one, if we're going to start taking a look at these PT tokens, these Pendle PTs, we really need to understand what the
I
underlying
just dropped it
asset.
in the chat, David.
Okay, great. Let me go ahead and grab that real quick. And I'm just going to go ahead and open this up so that we can all see this. And Mike, I don't know if you can share this with everyone in the on the call, but this is our looping calculator. So this is extremely valuable if you're just looking to simulate potential looped positions here. So let me bring it on back over here to Contango. So I am on the simplified tab here on Contango. I've selected USD rates. And now what I want to do next is I want to give it a minimum amount to invest. And now this is not because I plan to invest this amount. It's just because I'm looking for liquid opportunities where there are deep pools of liquidity. So the minimum amount that I am going to put here is $50,000. That way, I only see the deepest vaults, the deepest pools of liquidity. That's what I'm after. Okay, and then the minimum ROI, so this is actually return on equity, and on Contango, return on equity refers to it's for all intents and purposes, it is your APY on your invested capital until maturity. So, with those things out of the way, let's start digging into these specific opportunities here. And please forgive the fact that this hasn't loaded all the way. My internet is just super, super slow. Okay, so the first thing that I'm looking for when I take a look at this is the maturity date. Before I even look at the underlying assets, I'm looking at the maturity date. Now, why is that? Well, if I can only earn yield on the PT until maturity, and this PT matures 25 September, so in just about 30, 32, 33 days from now, if this matures in about a month, well, then I've only got 30 days to earn this phenomenal yield. And this is with max leverage. So this is not enough time for me. I
So,
would
so last episode, you were saying you like to see at least 60 days.
I would really like to go at least 60.
Okay.
And my goal with all of this is to structure what's referred to as a bond ladder. And a bond ladder is simply when you purchase bonds that expire at different times and with different underlying assets, so that you can create a constant fixed income cash flow. And
Okay.
so you can do that here. You can create a bond ladder using Pendle. Now, what we're doing over here on Contango, this is more of a trade. This is more of an interest rate arbitrage trade. And so what we need to make sure of is that we've got plenty of time to be in the trade for our collateral to appreciate. And right here, 25 September is just not enough time. So
Okay.
I'm going to pass on all of these, and let's move on here. 25 September, still 25 September. Okay, 25 September, September, still September. And now I'm passing on any pair that does not contain a PT because I want that fixed yield on my collateral side. So still looking, 25 September, September, still looking, and look at the yields as I scroll down through all these opportunities. The yields the ROEs are slowly dropping here. So this is September, this is September. We're going to get there. November. Here we go. So I know, right? September. Let's see. I still want to keep looking. So, compound USDO. Um, that would be the next thing we would do. Once we find a pair that we're happy with, then we would need to take a look at the underlying asset on the collateral side, and what is your debt token? What are you borrowing? But I want to just move through the rest of this to see if there's anything else that's a little bit further dated, or if we're just going to be taking a look at this one. Okay, so it looks like the one opportunity in November that Contango can see is CUSD0, USDO, borrowing RL USD. So let's go ahead and let's click through, let's click create position. All right. So once this loads, then we're going to be able to do a couple of things. And as we're waiting for this, I'm going to pop in here to Pendle, and I'm going to pull up the underlying asset, that CUSDO token. So right here in the search bar, I've got all of the chains highlighted. I have all categories highlighted. And here in the search bar, I'm just going to type in CUSDO. Compound USDO. And what I'm looking for here is I want to click through to the PT. So I'm going to go ahead and click through to that PT. And then I'm looking for this market info tab. And the reason why I'm looking for the market info tab is I need the contract address for the underlying. I think it's actually right here in the specs. But before I go and grab that contract address, notice when you click through to a PT and then you click on market info here on Pendle and scroll down, this is where you'll be able to see the Penco system. And so this is where you can use this PT token in DeFi. So these are the other markets where you can supply this token as collateral. So these PTs are composable. And for CUSDO, you can supply it as collateral on Euler, on Morpho, on Term Max. And what we're looking at is over here on Contango. So I just wanted to point that out, because if you don't see a Penco system for a PT on Pendle, then you may not be able to loop it, or you may not be able to supply it as collateral. So always be on the lookout for this Penco system. Okay, so the next thing I need to do here is I need to take a look at a chart of CUSDO. I need to know, what does this thing look like? Does the chart go up and to the right? Does it do a very good job of holding its peg? I need to know. So I'm going to click on the specs button. And what I'm looking for is the underlying asset contract address, this one right here. I'm just going to go ahead and copy that. And then I want to head on over here to Dex Screener. And in the search bar, I'm going to paste in that contract address. There we go. So this is on Curve on mainnet with 7 months of data and 45 million in liquidity. So this looks good. I'm going to click through, minimize the transaction history, and this is exactly what I was looking for. So notice this period of extreme volatility to the upside and the downside. What we're looking for here is, because this is a yield bearing asset where the yield accrues to the token price, we should see this go up and to the right slowly, like this over time. And so the fact that there was this period of volatility, I'm happy to see that that has resolved itself. And this has been much less volatile over the last couple of months here. So that's the first thing. I need to know, what does the chart look like? Now, the next thing is we need to know a little bit about this, who's the issuer of CUSDO. And so it's a permissionless yield-bearing asset issued by OpenEden. It is backed by OpenEden's flagship product, the T-bill, which derives its yield from 6-month short-dated US Treasury bills. So it sounds to me like CUSDO earns yield from treasuries, and it's issued by OpenEden. Now, this is the very minimum amount of work that you need to do on these stables. What I really like to do is use an AI tool like Claude. I'll use the Opus 4.1 model. I'll use the research mode. I'll give it a little bit of context about the stablecoin that I'm looking to research. And then I'll tell it, tell me everything you know about this and focus on the risks. So I happen to know that this is relatively safe, so we can just go ahead and continue on as if we had already performed the analysis, because I know that we have limited time here. So I've got a couple of options if I wanted to enter a position with CUSDO. I could head on over here to Contango and I could loop CSUSDO, loop the PT by borrowing XRP ledgers, or I think it's just Ripple, by borrowing Ripple's RLUSD product on Euler. So the next thing that I want to do is I want to learn about the debt token. What's going on with this debt token? And on this money market on Euler, what's the capacity? How much has been utilized? Have there been spikes in borrow costs? Because remember, I earn fixed yield on my collateral, but I pay variable yield on the debt side. So if this variable yield that I pay to borrow RLUSD eclipses or becomes greater than what I'm earning on my collateral, then I would have a negative arbitrage. I would have to exit the position or unwind the position immediately. So need to understand RLUSD on Euler. So to do that, we're going to head on over here to Euler.finance. I'm going to click Launch App. And I just want to make 100% certain that I'm on the right chain for this. So let's see here. CUSDO. What chain is that on? I think it is on mainnet. Pretty sure it's on mainnet, but just want to double check. Yes,
What's it called
is
again?
mainnet.
Oh.
CUSDO. So it is on mainnet. So now I'm going to hop on in here to Euler. I'm going to change the chain to ETH mainnet. And then I'm going to hop on over here to borrow. And when I click on borrow, then I'm going to select debt asset is RLUSD and
Oh,
select. There we go. Yeah. And let's see. Next thing is I'm looking for that collateral asset, CUSDO. And there it is. There's the PT. So I'm going to click through to that PT. And this is the opportunity that we see over here on Contango. Now, you've got a couple of options if you are comfortable with this and you want to move forward. You could just loop this manually on Euler. But the benefit of looping it on Contango is that all of those loop transactions are done in one batch order on Contango using a flash loan. So
So
it's
less fees.
much, yeah, fewer fees, more capital efficient. You're not going to have to pay a bazillion dollars in gas to loop and swap and supply and borrow and do that a bunch of times until you get to your desired position. So using Contango, you can do that all in one go. Now, one of the benefits, however, of using Euler and manually looping is that um, if you want to unwind the position, you could you could borrow against it, or if you don't even want to unwind it, if you just want to borrow further stables against the position, you could do that because you manually looped it. But on Contango, this is a trade. So you would be able to reduce the size of your trade or add to your position, but you can't borrow against it over here on Contango. So pros and cons to each. It's easier to create a looped position on Contango than it is to do it manually on a money market. But on the money market, you've got a little bit more flexibility. So just something important to know. Now, let's take a look at a chart of the debt asset. We've taken a look at a chart of the collateral asset, but we need to know, has the debt token depegged to the upside? And if so, when and by how much? And so I'm just going to go ahead and open up another DEX screener tab here. And in the search bar, I'm going to type in that RLUSD. And I'm just looking for the market with the greatest amount of liquidity. So it looks like on Meteora, there is quite a bit of liquidity for RLUSD, but only 8 days of data. We've got 1 year of data here. Now, this is, I'm assuming that this is on the XRP ledger. So let's just take a look at this. Let's just see what these data look like. Okay, so this is a 1 hour. I'm going to zoom out to a daily. And what I'm looking for, a red flag, would be depegs to the upside. Okay, so that's what I'm looking for. And there have been depegs to the upside. And so what we need to do is we need to measure that in percentage terms. So, and the reason why we're doing this is we're trying to figure out, our collateral. Is it likely that our collateral will depeg to the downside? And if so, in the past, by how much has our collateral depegged? And then for our debt token, we need to know, is it likely that the debt token will depeg higher? And if it has depegged higher in the past, by how much? And those two pieces of information together are going to help us determine how much leverage to use on Contango so that we can keep things safe. Because, heaven forbid there is a depeg, you want to make sure that you've got enough buffer so that you don't face liquidation. So that's why we're taking a look at these charts here. So I'm just going to go ahead and measure from 1 to the upside, and it looks like RLUSD over the last couple of months has depegged by no more than maybe 3.3%. Now, you go back to March, and we had, what was that, like a 6% depeg to the upside? So just want to keep that in mind, that RLUSD has in fact depegged in the past. Okay, armed with these information, let's hop back in here to Contango. And what I want to do first is set the position size. So I'm just going to click right here, and I want to go ahead and say, maybe I want to deploy, how about $5,000 into this position here. And because Contango has the Pendle API, you can actually swap in to a position here on Contango that contains a PT, but you can swap in using these handful of assets here. Sometimes it will allow you to swap in using like USDC or USDT. So you're going to have to first either swap into the PT or swap into RLUSD or CUSDO. So I would swap into whichever of these two assets is most liquid. So I'm going to go ahead and just select RLUSD, and why don't we change that position size to $10,000 there. Okay, So now notice the leverage is set to the maximum amount, which is 7.03x. And what we were just doing, working, taking a look at those charts, was so that we could tailor the liquidation buffer so that it becomes less likely that if there's a depeg event on either the collateral or debt side, that we face liquidation. So remember, if we take a look at RLUSD over the last year to date, RLUSD, and I'm not even going to go back year to date, I'm just going to go back to April. The depeg to the upside that we saw in April was 6%. Now, if we take a look at CUSDO, we would actually want this to depeg higher. That would actually be good for a position. But the fact that we don't see this depegging lower, and here, yes, it looks like it did depeg lower there, but it looks like it was immediately regained the peg. And so, one thing that's important to know about Contango is that they use a bunch of different oracles and a time weighted average price from those different oracles to determine whether you get liquidated or not. And I think it's a 9-day time weighted average price. And so, what that means is, let's say that you're in this position with CUSDO borrowing RLUSD and your collateral depegs by 5%, but your liquidation buffer was set to 2.5%. Well, it doesn't necessarily mean that you would get liquidated because the depeg event needs to persist for long enough to pull the time weighted average price lower. And if the peg is regained quickly, then the TWAP will not be pulled low enough for you to get liquidated. So, just something important to know about that. Okay, so let's bring it on back over here to Contango. Well, 2.5% liquidation buffer, even with that time weighted average price, Oracle system that they've got here on Contango, this is still too much leverage for me. And you see that ROE, that is effectively your APY on your invested capital. Now, here's the last thing that I want to do before I would be, comfortable to maybe open a position here. I want to hop back in here to Euler, and I want to see what the market for supplying and borrowing the debt token looks like on here. So I'm going to go ahead and click through, and there we go. There's the debt token. So RLUSD debt token, and what I'm looking for is the utilization. There it is. And I want to see if it'll show me utilization over time. I don't, there it is. So there's the interest rate model, but it's not showing me utilization over time. This is, for right now, useful. So at the kink, which is the optimal borrow amount for any vault here, at the kink, the borrow APY for RLUSD hits 10%. Now, right now, the borrow APY for RLUSD is sitting at 9.87%. So to get to this max ROE, you've got to use max leverage, because over here on Pendle, if you're earning 11.93% fixed for the next 89 days on CUSDO, but over here on the debt side, you're paying to borrow 9.87%. If this borrow APY becomes greater than your supply APY, you would have to unwind the position. So, really need to track the borrow APY here. Okay, so is this all making sense, Mike? As I'm going through all this stuff, do you think everyone's following here? What are your thoughts so far?
Oh, I mean, the way that you're presenting it is easily digestible. To be honest, I mean, I know that I'm gonna have to rewatch this episode a couple of times once I actually do it, just because I'm one of those that I have to watch somebody like we're doing right now, and then I have to physically do it and go through all the steps, and then it absorbs. I'm just one of those, I have to do it to learn it. But no, I
Gotcha.
mean, the way that you're presenting it is perfect.
Okay, great. Good to hear. So here, let's continue on. I actually want to use the calculator here to see just how close the calculator that Mike and I built is to what Contango says our yield would be. So what I'm going to do, and the one problem here is that I don't know what the LTVs are for this specific position. So I might not even be able to do that. But if I were going to enter a position like this, I
Mhm.
would definitely dial back the leverage. That's the first thing that I would do. After I take a look at the collateral and the debt assets, and I take a look at the charts and I look at what DPEGs have looked like in the past, if I'm comfortable moving forward with this, the first thing I would do is dial back the leverage so that I give myself a larger liquidation buffer. And so take a look at that. Even if I dial back the leverage to 5x, I would still be able to do 20% ROE. So 23% ROE is what Contango is saying here. And so what that means is I would be doing 23% APY on my invested capital for the next 89 days until maturity, 20 November. So this is pretty darn attractive. Now, what are the risks with something like this? Well, the core risk here is your interest rate risk. If the utilization for your debt token increases and pushes the interest rate model above the kink, then you could quickly find yourself in an unprofitable trade that you would have to either unwind or close entirely. And so, I'm reminded now of something that Jeffrey Gundlach, the CEO of Double Line Capital, has said in the past that, bond investors, that you make money slowly, but you can lose money quickly. And so when we're taking a look at interest rate arbitrage plays, whether you're using Contango to loop or you're on a money market and you're looping manually on a money market, or if you're just holding PTs over here on Pendle without using any leverage at all, you make money slowly with these strategies, but you have the potential to lose money quickly via a DPEG or via some type of negative net interest margin that you might suffer if your debt side suddenly becomes more expensive to borrow than what you're earning on your collateral side. So that's definitely something to be conscious of, is that interest rate risk. Now, where would I begin if I were just getting started with these yield bearing stables and just getting started here on Pendle? Here's where I would start. I would begin with the Athena products, and these are some of the best yield bearing assets out there. So I would take a look. You probably don't want to have exposure to ENA unless you're comfortable holding ENA. We were talking about stables, and ENA is not a stablecoin. It's just Athena's governance token. But this is actually nothing wrong with earning 31% on it. It's just that the duration is not quite long enough here. So going down the list, 54 days, 33 days, 68 days, 96 days. So if I move on over here, it looks like if I were on the BNB chain, or we could even take a look at this on mainnet, you can lock in 10% over the next 96 days on USDE. That's not bad. That's a fixed 10% over 96 days. Now, if we click through, then we could actually determine what our expected gain would be at maturity of the PT. So let's say that you're happy with this 10% and you want to lock in that yield for the next 96 days until the 20th of November. Well, you would swap into the PT, and you can swap into the PT using any stable that you want, really. Just make sure it's liquid enough. Let's say that we've got USDC and we want to swap into this PT. So how about we use $10,000 as the starting amount? What it's going to do as it calculates is it's going to tell us what our expected gain would be. So at maturity, we would redeem the PT at par plus your yield paid in the underlying. So you would earn a 2.5% gain if you just swap into the PT and hold it and do nothing else over the next 96 days. So that would be a 10% APY. Not bad. And that's if you do nothing else, just swap into a PT. Now, this becomes a little bit more exciting when you start to ladder your exposure to these fixed income products. So maybe you have a portion of your portfolio exposed to Athena's products with a 96-day maturity. And maybe you, in addition to that, take a look at some other PTs where the underlying is a yield bearing stable. And maybe you want to take a little bit more risk with a portion of your portfolio. So you've got a portion of your bond ladder in Athena's products, and then maybe you've got another portion in something much, much more speculative, paying 21% over the next 68 days. Let's take a look at this. So the research process is super important here. SMSUSD. So I am unfamiliar with SMSUSD, but here's how we can learn about it. The first thing that I want to do here is I want to click on market info. And it's telling me the description is SMSUSD is a yield-bearing stablecoin that earns returns from Main Street's options arbitrage strategies on Deribit. Users can opt for standard yield with 1x points or forego yield to earn 30x points instead. Okay, so what I would do here is I'm going to go ahead and right click on this, open in new tab. I need the URL for Main Street Finance. And really, wow, look at that, 24% APY. There looks like the yield generation mechanism is some type of options trade that they're engaged in. What I'm looking for here is their documents. That's what I need. I need their documents section. So I think this is it. There we go. Okay, now that I've got their docs, what I want to do next is I want to go ahead and copy this, bring it on over here to Claude, and let me bring Claude up. I don't know if Mike, can you see Claude on my screen here, or is it? It seems like it's not
No,
opening.
it's just welcome to Main Street. It's still the docks.
Gotcha. Okay, so why don't we pass on using Claude for right now? Let's use
There you
Gemini
go.
Deep. Yeah,
It,
let's use Gemini Deep Research instead.
there you
Okay,
go.
and so what we're going to do is I'm just going to paste in that URL. I'm going to hop back on over here to Pendle. I'm going to copy this description, jump back in here to the prompt, and I want to paste that in. And please read the documents section for this yield-bearing stablecoin product and tell me how the yield is generated and what the risks are. Okay, and so hit enter, and Deep Research is going to build a plan for conducting the research, and then it's actually going to go out and do it. And it's almost like having a team of,
Really,
PhD
really,
level
really small,
researchers.
really, really smart people.
Yeah, it's pretty freaking great. So here's the plan, and you can actually go in and edit this plan if you want to. But I'm just going to hit start research. Now, usually this takes 10 minutes or so. So if we're lucky, we might have this research done by the end of our call here in 15 minutes. Okay, so as it's going through and learning about this token, the next thing that I want to do is hop back in here to Pendle, and I just want to take a look at a chart of SMSUSD, and I want to see, okay, it looks like, remember how we were talking about the Penco system? Well, notice for this product, there is no Penco system. So what that tells me is I may not be able to loop it anywhere. But that's okay. 20% fixed yield for 68 days is pretty darn attractive by itself.
Yeah.
I just have to become comfortable with this SMS USD product. And if I'm not, then I won't enter the position. Okay, so I'm going to click on the specs button right there, and I'm looking for the underlying asset contract address. I'm going to copy that, and now we're going to hop back in here to Deck Screener. I'm going to paste this in, paste it in, and there it is. SMS USD. Looks like this is on Sonic. Unfortunately, no liquidity, so we're not going to have data here. That's a shame. Okay, let me see if there's another way we can take a look at a chart of SMS USD. So that's the LP address, underlying address. I wonder if in their documents section, if maybe there is another token contract address there. And this is on Sonic. Okay, so that's honestly potentially a risk. Just the fact that it's on Sonic at all, because Sonic is much less liquid than mainnet is. So let me go ahead and hop in here to the documents section for Main Street Finance, and what I'm looking for is I'm looking for a token contract addresses. Okay, so SMS USD token contract, was that the same one that we just pasted in here? Is that the same? C29 and C29? Yeah, it's the same one. Okay, Silo token contract. All right, mint and redeem, custodian manager. So, yeah, if there's very little data, that is going to be difficult. Maybe we can see something for this. You think we might be able to see something on TradingView? Probably not. So that's a problem. If I can't bring up a chart of the asset with decent data, then I don't know whether it has been able to keep its peg or not. And this looks like a super interesting project, but where's the liquidity? I need liquidity. So as this goes through and completes its research here, let's hop back on over here to Pendle and let's move on from this top one. And let's see here. How about staked USDF? So this is on mainnet, and let's click the I real quick. And the description, this is a Falcon Finance product. Staked USDF is a yield-bearing token on Falcon Finance designed to accrue value over time through Falcon's diversified institutional grade yield generation strategies. And then in parentheses, basis trading and arbitrage using stablecoins and blue chips as collateral. So very, very similar to what we are getting ready to do here. But this is, yes, it's got a large Penco system. So you can supply this as collateral on Morpho and YieldFi and Euler and Contango. So let's just go ahead and take a look at SUSDF. Now, I know that it's maturing in 33 days, but I just want to go back through this process of completing the research one more time. So I clicked on the PT, and the first thing that I want to do this time is I want to take a look at a chart of the IY over time. Instead of on an hourly, I want to zoom out to a weekly. Okay, so the IY, the implied yield, is what you earn. This is the fixed yield that you earn when you swap into a PT. And the IY moves inversely to price of the PT. So when price, because remember, these are basically bonds. These are basically zero coupon bonds. So price and yield move inversely to one another. So as the price of the PT goes down, because market participants are exiting their PTs prior to maturity, the yield, that fixed yield on the PT goes up. Now, why would people want to exit this prior to maturity? Well, because ETH is at all-time highs. Why would you want to be in a yield-bearing stable earning 17% if you could take that capital and buy ETH with it and earn 17% in a session like we did today? So just one thing to know is that the price and yield are inverse to one another. Okay, so next thing here, I'm going to click on specs, and I want to go ahead and find the underlying asset contract address. I'm going to copy this, bring it on over here to Dex Screener. Let's paste this in. Hopefully, yeah, see, nothing. Staked Falcon USD. Sometimes these are difficult to find charts for. And take a look at that. So I don't know if this is a data error or what, but I think I might have grabbed the wrong address. So that's the underlying asset address. Then that's what I'm looking for. I'm looking for SUSDF, but I just don't want to price it in something funky. Let me see if I can just type in SUSDF and it brings up anything for me. Okay, so nope. So nothing. These can be difficult to find charts for sometimes. You could try CoinGecko. You could try pasting the contract address into TradingView. Sometimes that works to bring up a chart. But if you can't view the chart, then it can be kind of difficult to make heads or tails of it. All right, so that research that I requested Google Gemini Deep Research to perform, it has completed, and I've got a Word document or a Google document that is loading right now. Let's just take a look at this real quick. Okay, so I want to learn about how they're generating yield. Okay, dual token system, MSUSD and SMSUSD. Okay, so MSUSD, that makes sense now. So staked MSUSD and MSUSD. Let's see if we can bring up the chart for MSUSD. I'm going to just go ahead and paste this here, and very little liquidity. It's on Sonic, so that's good. We know that we're looking at the right asset. Okay, so I'm just going to click through to the one with some liquidity, and looks like it's very new. Okay, so better than nothing. At least we've got some data now. Let's bring it back on over here to the report. This is the protocol's primary token, designed to be the stable entry and exit point of the ecosystem. It's created when a user deposits an equivalent amount of a recognized stable, specifically USDC, into the protocol's minting contract. Oh, I see. So you deposit USDC and then you mint MSUSD. And then if you stake it, you earn 24%, I bet. I bet that's how this works. Yeah. So you deposit USDC or mint MSUSD with it, and then you take that MSUSD and you stake it for SMSUSD, and that's how you earn that yield. Okay, that makes sense. So what's the mechanism? How are they generating the yield itself? Okay. In essence, MSUSD represents a user's direct claim on the capital that is to be deployed into the underlying trading strategies. Tell me what those trading strategies are. What are the trading strategies? Okay, so the user journey, KYC, minting, action. What are the strategies that they're running to generate that yield? They said that they're trading options on Deribit. But okay, theoretical analysis of stated strategies. They claim to generate yield through a portfolio of institutional grade delta neutral yield strategies. Okay, that's meaningless. Like, tell me more. The term delta neutral implies that these strategies, yada, yada, yada. Okay, primary strategy, pioneering options arbitrage. The protocol explicitly positions itself as a pioneer in options arbitrage. Okay, but what are they doing? So potential strategies I think that this is just a hallucination from Gemini. I don't think that this is actually what the protocol Main Street Finance says it's doing, because Gemini says here potential strategies falling under this umbrella include put call parity arbitrage and volatility arbitrage. The claim of pioneering strategies is a significant one. So what are they doing? secondary strategies, basis trading, and hedged LP farming. Okay, so in addition to the options arbitrage, which I guess they don't go into detail about, the documentation mentions two other delta neutral strategies, basis trading and hedged liquidity pool farming. Okay. So who's managing all this? Like who are the people behind this that are managing this fund? Transparency dashboard. Okay, mint cap, MS supply, proof of reserves on Deribit. But I want to know about the people and the audits now. So I want to know who's actually running this. And let me just dig into the documents a little bit manually first, because I want to know how they're generating yield. So, ecosystem verification, okay. Trading strategy framework. Here we go. This is what I'm looking for. Options arbitrage. Okay, so they're just, the difference between implied and realized. Implied volatility is almost always overstated compared to realized. So they say that our options arbitrage approach focuses on the fundamental relationship between two volatility metrics. Okay, sure. So they're trying to predict when realized will be less than implied so they can sell premium. Of course, they're selling straddles. All right, that's fine. And then they're also buying vol. They're buying premium when they think that realized will exceed implied. Alrighty, but this is it. Like that's the strategy. That's it. Implementation for okay. So market analysis, yada yada. It looks like they made this with ChatGPT. Market opportunity, performance profile. Okay, options market has grown substantially. So if they're just trading volatility on Deribit, um, I mean, they better be some good traders. That's why I want to know who's actually managing this. So let's see here, performance profile. It says here, current testing demonstrates annual returns exceeding 35% after all fees. Well, that's great, but prove it. Like, prove it. Trust but verify. Okay, strategy, backtesting, and validation. Backtesting methodology, sure. Performance metrics, okay. So it's one thing for them to just say this and give me a table, but I mean, it looks good, but like I still this is not enough. Like I want them to really prove it, and just showing a table in their document section isn't enough for me.
Yeah.
Hedged LPs. So now they're talking about hedged LPs, and since I do this for a living, I know how difficult it is to really hedge an LP well and make it profitable. So this is just too thin. This doesn't give me any information about what they're actually doing. And then they say basis trading implementation with no information about it. Key features. Okay, when vol increases, our dynamic hedging protocols adjust position exposure. I mean, this is just not enough. It's just not enough information about how they're generating yield for me to be confident that if I deposit my cash and mint this MSUSD token, that I need to know that I am not in some way the yield. Okay.
Yeah, yeah.
And I'm not saying that that's what's happening here. All I am saying, though, is that their documents are too thin. It's just okay. And then here's an audit. So something that's important when we start taking a look at audits is the auditing firm. And I don't know anything about WatchPug. I've never heard of WatchPug before. That doesn't mean that this is not a reputable auditing firm. It
I'll see
just
what I
means that
can find.
it's probably a good idea to dig into the audit a little bit. Let's take a look at the audit. Maybe they give us a little bit more color on their strategy in the audit. Maybe. We shall see. Okay. And the audit is 29 pages. So I'm just going to go through from the bottom. And cooldown. Oh, what's the cooldown period for unstaking? So if you stake, how long do you have to? 7 days. MSUSD will be available for withdrawal 7 days after unstaking. Okay, so if this thing depegs, you're basically SOL. So you gotta
Yeah,
be
yeah,
careful.
because it take you forever to get your, the cool down to get your liquidity out.
Yeah. So, but Mike, you see the amount of research that goes into just one opportunity here on Pendle. Regardless of what you're looking at,
I mean,
if
that's why, like, me personally, I spend I tend to just focus on certain protocols, certain, projects, certain stable coins, just because it mitigates the amount of, of this deep research I have to do. And am I missing out on some higher yields? Absolutely. Am I hedging, or mitigating my risk by doing what I do? Probably. Just because, it's just, yeah. I mean, I'm a lot more confident with USDT, USDC, even PUSD, because I know that it's backed by, 1-to-1 with USDC. So yeah, it's just that's kind of where my head's at. But I am super low risk. I don't like, kind of the my portfolio that I have for DeFi and for crypto for that matter is, I mean, it's money that if I lose it, it will hurt, but it's not going to destroy me. But at the same time, it is money that potentially is going to, change my financial future to where, instead of my, current retirement, I might, two, three, four X or more, my monthly income, just because of using DeFi and investing in crypto all through the bear market. And so, it's not a nut that I want to lose. Could I afford to lose it? Yes. Do I want to lose it? No. So, long story short, I just like sticking to trusted protocols that are non-custodial, and these, strategies that I'm using. I'm using reputable, deep liquidity stable coins. Just the usual suspects.
Yeah, and you can build a low risk fixed income portfolio using Pendle and allocate yourself to high quality yield bearing stables. That is definitely possible. And you don't need to take on any leverage at all to do it. So, all I was trying to walk through today is the process that I follow as I'm, doing my research before I enter any type of position on Pendle or if I'm going to loop on Contango or any other money market. So,
I
but
personally, I just take a bunch of liquidity and heat into positions and hope for the best. Just kidding.
I mean, that's one way to do it. Yeah,
What's
man.
the worst that can happen? Yeah.
I mean, well, on days like today,
Right?
ETH up
Yeah.
15%, right? So
Right. Yeah. No, it's like, yeah. What is the market's doing right now? I mean, I know that we plateaued a bit. I mean, hell, we need to cool off. Um, yeah. So no, I mean, we're just kind of at least my portfolio is trending sideways right now. Um, but um, but yeah, I
yeah,
mean, shit. This
fresh
morning,
all time highs. Yeah, fresh all
yeah.
time highs in ETH. Yeah.
No, absolutely. So yeah, let's actually take a look at the markets real quick. Doo-ba-doo.
And Mike,
So,
I've got another call in 10 minutes. Just want to give you a heads up.
all right, cool. All right, so yeah, no, it looks like yeah, Ethereum's up 14.3%, Bitcoin's up about 4%, Solana about 10.5, Doge. Yeah, I mean everything's still, kind of, I mean we definitely aren't still pumping, on the hour, in the past hour or so. There's exceptions, of course, but I mean, this is healthy though. I mean,
Yeah.
honestly, feels like a healthy pump. Good, solid pump very quickly, but we've leveled off. It's cooling off, and potentially going to send it higher. So, I mean, as hard and as fast as that pump was, if it didn't continue, this is what I would want to see, because otherwise, you're just going to see a pump and then an immediate dump. So,
Yeah, Mike, something that Arthur Hayes said the other day. I was watching an interview of his from maybe a day or two ago, and he was asked what some of his favorite altcoins are for a potential alt season and just moving forward. And what he mentioned were uh, Athena's token, and
mhm.
EtherFi, their ETHFi token. But the reason why he mentioned those two is important to me. So, something that I've been saying for the last 18 months is that during any type of prolonged bear cycle, I think that the protocols that survive it are the ones that actually make money. And
Mm.
the protocols whose tokens I want to hold, those protocols have to be returning those revenues to me, the token holder, in some way. Now,
Aerodrome,
unfortunately,
aerodrome.
I mean, but but those VE 3.3 protocols,
Mm.
um, so inflationary, the tokenomics. So, the difference, at least what I understood from Arthur Hayes about EtherFi with their ETHFi token, is that the EtherFi protocol makes a ton of money and they're
Mm.
buying back their tokens. And so that's a way of returning value to token holders. So that's really the mechanism that I'm looking for, because there are so many protocol and governance and DEX tokens and reward tokens out there. And most of them have zero value. And the protocol or DEX or governance tokens where there's no real connection between the cash flows that the protocol generates and the token itself, it's almost like they've issued a meme coin, kind of, sort of. If the connection between the cash flows and the token price is
Well, my
tenuous at best, you
well,
kind
correct
of
me if
got a
I'm
meme.
wrong, but like aerodrome, the new minting of tokens is for the fees that are generated by the platform, and that's what's what's minting those new tokens is the profits that the platform realizes, and then that is what's used to pay those of us that are locked. So and of course a lot of that goes back into where it auto compounds and auto locks into those. So it's not just there's like a bunch of tokens just willy-nilly flowing onto the market. I mean, there's definitely still liquidity behind them, and there's definitely still a good portion of them are being max locked or relocked, and anything that's not paid out, aerodrome itself max locks. So there's that.
I think that Arrow is likely to perform better than every other DEX token because
Mm,
of that partnership with Coinbase and
thank you.
all of the trading volume that's going to be pushed through the base app. Aerodrome will benefit greatly from that. So I think that the Arrow token is likely to perform extremely well. And now that ETH has put in a fresh all-time high, even though just by a couple of points, I think if ETH pushes just a little bit higher, I think we might see Arrow back at its old all-time highs around $2.30. But Mike, just keep in mind, you know, um, according to the Bitcoin halving cycle analysis, in the post-halving year, Septembers tend to be red. So it's still August, it's August 22nd, and things are ripping. But if next month the expectation is that maybe it's a red month, and in TradFi world, listed equities, September, October is the most volatile period of the year, seasonally speaking.
Mm,
So if we're ripping at the end of August, then, and if you expect there to be some type of correction in September, which I think would be a gift, it would be a buyable correction if it comes in September. The way that I'm playing it is I'm looking at gold as a hedge. I'm looking at
mm,
XAUT and I'm looking at PAXG, so
mm,
tokenized gold. So I think that regardless of whether markets go up or markets go sideways or markets go down, I think over the next 6-8 weeks, I think gold goes up anyway. So I'm just kind of looking at having the core of my portfolio long ETH. I'm going to start rotating into alts, but not yet. I want that last pullback. And so to hedge that pullback, take a look at some gold. And you can supply XAUT and PAXG on a handful of different money markets as collateral and actually loop your gold, which is kind of cool. So
Yeah, I'm doing that on Plume with Matrix Docs Gold XAUM.
yeah, see, great
So,
minds think
but
alike, man. That's awesome.
oh yeah, no, I mean, you got to. You always got to be looking for something. But we'll end on this. Where did I put that? There it is. So yeah, Centrifuge, a tokenization RWA play. They actually just announced the other day uh, an integration with Aerodrome where they're basically making RWAs or tokenized real world assets accessible on DeFi platforms, and they're using Aerodrome to do that. So it's just Aerodrome just keeps racking it up. So like I said, I mean it's definitely one I'm bullish on, and I mean it's definitely pumping today. But David, I appreciate it. I know you got to go. But thank you very much. Again, everyone out there, on Wednesdays, we do a DeFi show. Myself, David, and Jake Call. And the links for the school, for the DeFi University, are in the description of the show and on the channel. Today is your last free day. After that, it is $97 a month. Still a great bargain. And Metrics Finance. There is a link, and it is a DeFi portfolio tracker. So go ahead and check those out. And until next time, David, thank you again.
Thank you, Mike. Peace, bro.
Take care.